This week, the global market picture is completely red. The United States markets fell. European indices fell. Asian markets also corrected sharply. Almost everywhere we see weakness and fear. But in the middle of all these negativity, there is one bright spot, and we will discuss that very soon as we move forward in this week's United States market analysis. Before we begin, here is an important disclaimer. Market returns are never guaranteed, but when we do the research and analysis deeply, that is fundamental analysis and technical analysis, we do get an edge in the market, but risk management cannot be ignored. Now let me give you a quick introduction to today's analysis. In this video, we will look at how the S&P 500 and Nasdaq 100 performed this week, how the global markets moved, what precious metals are doing, how volatility and sentiment changed, and what is the latest macroeconomic data telling us. After that, we will go to the chart section and I will explain the S&P 500, Nasdaq 100 and Nifty 50 using simple price action and support and resistance levels. So let's begin our analysis for this week. US market this week. Let us start with the United States market performance this week. The S&P 500 index closed 1.95% lower. Nasdaq 100 index closed 3.07% lower, which means technology stocks remain the weakest segment in this week. The Dow Jones Industrial Average Index closed 1.91% lower, and Russell 2000, which represents the small cap stocks, closed 0.81% lower. The overall picture shows that all major US indices were under pressure this week, with Nasdaq falling the most. Global markets this week. Now let us look at the global markets across Europe and Asia. The United Kingdom's FTSE 100 fell by 1.64%. Germany's DAX fell by 3.29%. Japan's Nikkei 225 fell by 3.48%. Hong Kong's Hang Seng fell by 5.09%. In contrast, India's Nifty 50 stood out as the only major market that closed in the green with a gain of 0.61%. This makes India the strongest major global market for the week. Market of the week. Since Nifty 50 closed with a positive gain of 0.61%, it earns the title of Market of the Week in this week. It showed relative strength even when most of the global markets were falling. We will see its price action when we do the chart analysis. Precious metals this week. Now let us move to the precious metals. Gold, represented by XAUUSD, closed 0.51% lower. Silver, represented by XAGUSD, closed 1.11% lower. Both metals saw some profit booking after their recent rise. They are still holding their broader structure, but the week remained slightly negative. Sentiment and volatility. Let us now understand what the market sentiment and volatility are telling us. Volatility index, that is VIX. The VIX, which is the volatility index for S&P 500, jumped sharply this week. It reached 23.42, which is an increase of 18.16% in just single week. The VIX is still below its usual upper band of 29 to 33. However, this rise clearly shows fear and uncertainty in the market. Fear and greed index. The fear and greed index created by CNN is showing extreme fear with current reading of 11. For reference, the previous close was at 6, which was very extremely fear zone. 1 week ago it was at 21, 1 month ago it was at 28, 1 year ago it was at 56, which was in a greed zone. This shows a clear shift from greed last year to extreme fear today. Market momentum. Momentum indicators also show weakness. The S&P 500 has dropped sharply and is now almost touching to 125-day moving average. This condition is labeled as extreme fear by CNN momentum model. Put call ratio. The 5-day average put call ratio has risen to 0.82, which is considered extreme fear. A high put call ratio shows that many traders are buying put options because they expect market to fall. Why this is important? The fear and greed index acts like an oscillator. Historically, whenever it reaches to extreme fear levels, markets sometimes bounce back, but only if price action also supports the possibility. We will check this possibility during our chart analysis. Macro updates. Now let us look at the important macroeconomic news from the US. Jobs report. A delayed report for the month of September showed that the US has added 119,000 jobs, which was more than expected. The unemployment rate increased to 4.4%, which is the highest level since October 2021. Average hourly earnings increased by 0.2% for the month. This indicates that the labor market is softening, but is still generating new jobs. Bond market reaction. US Treasury yields moved lower after unemployment rate went up. 10-year Treasury yield fell to 4.098%. The 30-year bond yield moved up to 3.552%. The 2-year yield also dropped to 3.552%. Lower yields often indicate that the investors expect future economic slowdown or potential rate cuts in coming months. Technical analysis. In the next section, I will walk you through the charts of S&P 500, Nasdaq 100 and Nifty 50. We will mark the support and resistance zones, observe the price behavior and discuss the probability for the upcoming week. This will be very simple, clear explanation directly on the charts. This is the weekly price chart of S&P 500 index. The index finally closed at 6,602.99 and thus it was lower by 1.95% on week basis. Look at the price action. After a parabolic rise, the pullback has started. When you see the candle of this week, there is a large lower shadow and the price seems to have taken support at EMA 55. Considering the price action, can you see it has struggled here 4 weeks in a row to go past and finally gave a breakout over here. So 6,481 to 6,550, because earlier price has taken support here, becomes the immediate demand area. Now look at the daily price chart. This was the upside move, multiple gap formation and finally the exhaustion gap, which is like a hanging man candlestick pattern. Once again an exhaustion over here, hanging man kind of pattern, and it failed to create a new high. So this is a distribution kind of pattern. Of course, a minor distribution kind of pattern, but could be a complex correction. What we call it is an ABCD pattern. If we measure the ABCD pattern and possibility, I am measuring the possibility. So it is currently resting at 127.2% expansion level and 161.8% expansion comes at around 6,460. So this is the area, demand area, which is very significant. If this demand area holds, we might see an upside move in S&P 500. Where is the resistance? The immediate resistance it will face is the multiple support over here. So 6,675 to 6,750 is the immediate supply area. Once this supply area is taken out, we can expect a resumption in the trend in S&P 500. We can expect a bounce back in the coming week especially on considering the fact that the price is at support level. This is the important consolidation band representing the demand area, and fear and greed index is in extremely fear zone. One more evidence I would like to explain on the momentum indicator RSI. If we compare this level versus this level, can you see the MDRP, that is momentum discrepancy reversal point, because there has been a deeper loss of the momentum in comparison to that of price. This is the price chart of Nasdaq 100 in weekly time frame. The index closed at 24,239.57 and thus it was lower 3.07% week on week basis. Massive impulsive wave and then a pullback. Here too, it formed the exhaustion gap over here and then this pullback is started. But here too, the price action is encouraging. Here it took the multiple weeks to cross over here. So this was the area of resistance. There is a confluence of EMA 55 where it seems that the price is taking support. So we need to check whether the demand area created as per the price action from 23,969 to 24,200 where the price has earlier taken support, whether it holds or not. If it is defended, then we might see an upside move in Nasdaq 100 too. But where is the resistance if it moves higher? If we do the retracement analysis of this falling wave, the 38.2% retracement level comes at 24,750, which could be the potential immediate resistance. And if it crosses that, then next level of resistance would be 25,300, which is nothing but the golden ratio. Here too we can find the MDRP. Considering this level to this level, we can see on RSI clear cut deeper loss in the momentum in comparison to that of price. So Nasdaq is trading in the demand area itself. The only question is whether this demand area would be defended will only be known in the forthcoming week. So this is the daily chart of Nifty 50 index of India, which is our market of the week. Here we can see the very strong price action. There is a rounding pattern kind of breakout over here. During the throwback, the demand area which was created by the neckline of this rounding pattern was defended. And now yet another continuation chart pattern can be seen, which is a cup and handle pattern. So overall price action is quite strong. To conclude, the overall global sentiment this week was weak. Most international markets fell sharply. The US market and indices showed a clear sign of fear, supported by rising volatility and negative sentiment indicators. India's Nifty 50 remained the strongest major market. If you found this analysis helpful, please like the video, share it with others, and subscribe to the channel for more educational content. You can also explore our Zero to Hero playlist on our main channel DK Sinha, which is available in English version too, to strengthen your market basics and technical skills. Thank you for watching. See you in the next video.
Let's start with this stock market 101 video.
Good idea. It covers the basics.
Yeah.
Yes.
And then maybe the common mistakes one.
Yes.
Yeah.
So we avoid those.